Hi guys, welcome back to Tax Q&A. In today's video, I'll be answering the most asked questions about taxes when you deal with real estate properties. Let's get started. Okay, Arav asks, I have two house properties. One of them is self-occupied and the other is rented out. Do I have to pay tax on this rental income? Is there any deduction available or the entire amount is taxable? Yes, any income that you receive by renting out a house or any other property is taxable. It is reported under the head Income from House Property and taxed as per your slab rate. You do get a standard deduction of 30% on this rental income, plus you can also claim the municipal taxes that you have paid. Ananya is asking, I bought a house this FY on loan. I know the interest amount can be claimed as a deduction. Can I claim the principal amount as well? Are these deductions allowed under the new regime? Okay, so whenever you take a house loan, you can claim the interest you're paying on it as a deduction. If it's a self-occupied property, there's a cap of 2 lakhs on the deduction. But if it's a let-out property, there's no such limit. Now, for the principal amount, you can claim it under Section ADC, which has a limit of Rs 1.5 lakhs. However, this section also covers other investments like PPF and ELSS. So it's quite uncommon that someone has not exhausted this limit yet. As far as regimes are concerned, all these deductions are available under the old regime. But in the new regime, you can only claim the home loan interest deduction for a let-out property. Next, Vihan is asking, planning to buy a house on loan. Many people suggest that it's better if I take a joint home loan with my wife. Is it actually beneficial? Good question. See, taking a joint home loan can have a few benefits. Like I previously mentioned about the deductions on home loan principal and interest amount. All of these will be doubled if you take a joint loan. Both you and your wife can individually claim the interest deduction up to Rs 2 lakhs and the principal amount up to Rs 1.5 lakhs. Just a heads up though, the co-borrower also needs to be a co-owner of the house in order to make use of all these benefits. Next, Kavya is asking, the tax rates were changed in the recent budget. I have to sell one of my houses this year. How much taxes will I have to pay? This year's budget indeed brought in several changes, and one of them was revising the tax on long-term capital gains to 12.5% for all kind of capital assets and removing the indexation benefit. Now, indexation benefit helps you take inflation into account and then calculate your capital gains. In cases where properties are held for a very long period, this plays an important role. So much that the tax liability at 20% might be lower than 12.5% because of indexation. Hence, recently the government announced an amendment following which you have now two options to choose from. You can either pay tax at 12.5% without taking the indexation benefit, or take indexation and pay tax at 20%. Next, Arjun is asking, I sold one of my house properties, have capital gains of about Rs 70 lakhs. Are there any exemptions available for such gains? Absolutely. There are exemptions you can tap into. If you reinvest this entire sale proceeds into another house property, you won't have to pay any tax on those gains. Alternatively, you can invest in government notified bonds like NHAI and REC bonds. There are some additional conditions here. The details are covered in a tax Q&A thread. You'll find the link in the description. Next up, Sneha is asking, I'm buying a house property. I heard that as a buyer, I'll be liable to deduct TDS and file a form. What is this about? That's right. So whenever you purchase a property, there are two parties, the buyer and the seller. Now, as most of these property transactions are high value, the government wants to collect upfront tax on these. Hence, buyers need to deduct a 1% TDS of the property sale value and deposit it with the government before making the payment to the seller. Say if you're purchasing a house for 1 crore, you'll deduct 1 lakh as TDS and pay the remaining 99 lakhs to the seller. You need to then deposit this 1 lakh with the government by filing Form 26QB on the ITD portal. While filing this, you enter details of the seller as well as the property that is being purchased. Now, because these taxes are paid on behalf of the seller, they'll be visible in the seller's Form 26AS and they'll be able to claim the tax credits while filing their ITR. Now, Karan is saying, my grandfather owned a house which is now passed on to me as inheritance. Do I have to pay tax on such property? No, there is no tax on inherited property in India. However, any income generated from such property will be taxable. For example, say you decide to lease the house. In this case, the rent that you receive will be taxable. Similarly, when you decide to sell the property, you'll have to pay tax on the capital gain. Now, Anjali is asking, I own a property abroad. Is there a need to disclose it here? Depends on your residential status. If you are an NRI, there's no need to disclose your foreign assets. But if you're a resident, you'll have to report the details of such house property while filing your ITR, and also any income you're earning from it. And it's a wrap. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. Catch you in the next one.